Hello and welcome to Investment Insight, your clear take on the markets. Let's get started.
Great to be here.
So I want to start us off with a simple question. Imagine you're a bank, and for years you've been lending money to your friends.
Okay.
They all promise they'd pay you back, but the economy takes a turn. Some of them lose their jobs, and suddenly you're looking at a bunch of IOUs that might be worthless. What do you do?
Well, you stop lending to those friends, for one, and you go find some new friends, ones with money.
Exactly. You find the rich neighbors. And according to the analysis we're digging into today, that is precisely what the world's second largest economy, China, is doing. It's this massive risk relocation.
That's the perfect way to put it. I mean, for so long, the story was China will lend to anyone, anywhere, just to get a foothold. But if you look at the recent data, that era is, well, it's over.
It's just done.
It's done. With President Trump in the White House, the tariffs are back up, and the whole global picture, it's a lot more tense. So China's adapting. They're not just throwing money around anymore. They're being very, very smart about where it goes.
So the open checkbook is closed.
It's locked. It's all about ROI now, return on investment.
And that's our mission for this deep dive. We're going to unpack three huge shifts in China's playbook. First, the Gulf. Why are they pouring billions into places like Saudi Arabia and the UAE?
To rich neighbors.
The rich neighbors.
Yeah.
Second, we'll head to Africa, where the mega loans are gone, but, and this is the twist, the mega sales are booming.
Right.
And third, this one really surprised me, biotech. How China is going from the world's factory to maybe the world's laboratory.
It's a huge story. It's really about a maturing economy moving from, flashy and risky to quiet and profitable.
Let's follow the money then. Let's start with the Gulf because the numbers in the research they're pretty staggering.
Oh, they really are. In 2025 alone, Chinese banks lent, get this, $15.7 billion to the Gulf region.
$15.7 billion. And how does that compare to the year before?
It's nearly triple, a massive surge.
Okay, but is everyone just lending more to the Gulf? Is that just where the money's going right now?
No, and that's what's so fascinating. Western banks from the U.S., UK, Europe, they only lent about $4.6 billion in that same period, combined.
Wait, so China is outlending the entire West by, what, 3-to-1?
By a factor of 3, yeah. The West is pulling back, and China's rushing in to fill that void.
So why, Wall Street usually follows the money. Why are they leaving billions on the table here?
It's complicated, but a big piece of it is, frankly, regulation and ESG.
The environmental, social, and governance rules.
Exactly. For a big European bank funding a new pipeline or something that supports fossil fuels, it's a PR nightmare. They have these, carbon reduction goals they have to hit.
So they're saying, we can't touch this, it looks bad.
It looks bad, and it might even violate their own internal policies, so they step back. And China steps in and says, we'll take that deal, we don't have that problem. But it's more than that. They're also doing a credit check.
Back to our analogy at the start.
Right. They got burned lending to countries that couldn't pay it back. Now they're looking at Saudi Arabia and the UAE, and what do they see?
Oil.
Dollars, oil, dollars, and a really good credit score. It's a flight to quality. They're swapping risky borrowers for safe ones.
But I'm guessing this isn't just free money. There have to be strings attached. It's not just cash in a suitcase, right?
Never. It's almost always what we'd call a package deal. China provides the loan, but that loan comes with a condition.
Which is?
That the money is used to hire Chinese companies to build the projects, the solar farms, the new cities, the infrastructure.
So wait a minute. The money leaves a Chinese bank, goes to Saudi Arabia, who then uses it to pay a Chinese construction company.
And the money ends up right back in the Chinese economy. Yes, it's a brilliant closed loop. It keeps their own people employed, especially with their property market struggling at home.
That is smart. I also saw a note about currency, though. We hear a lot of buzz about de-dollarization. Is that actually happening here?
It's starting to. It's not an overnight thing, but yeah. The Gulf has always priced its oil in dollars. But when your biggest banker is suddenly China, you become a little more open to the idea of using their currency, the yuan.
So they're sort of laying the groundwork, building a new financial system where they call the shots?
That's the long-term play. If you're the one holding the debt, you have a lot of say in how it gets paid back.
Okay, so in the Gulf, they're the new safe banker.
Yeah.
Let's pivot to where they used to be the big banker, Africa. For a decade, the story was China building everything. Railroads, dams, you name it. That's over.
It is a total collapse. In 2024, Chinese lending to Africa fell to just $2.1 billion.
$2.1 billion for the entire continent. I mean, that's like the budget for one football stadium in the U.S.
It's tiny. They only funded 6 projects total across all of Africa. A few years ago, it would have been hundreds.
So are they just leaving, packing up and going home?
No, and this is the crazy part. The lending has stopped, but the selling has not. While the loans fell off a cliff, Chinese exports to Africa hit $225 billion.
Hold on, say that again. They stopped lending them money,
Yep.
but they're selling them more stuff than ever.
More than ever. Think of it like this. They've shifted from being a mortgage lender to being a giant department store.
Okay, break that down for me.
For years, they were the bank, giving out huge loans for infrastructure. But countries like Zambia and Ghana started to default. China realized, uh-oh, this is bad debt.
So they turned off the tap. No more loans.
Immediately. But at the same time, China has this huge domestic problem. Their factories make too much stuff. And with the Trump tariffs, it's getting harder to sell all those solar panels and EVs to America.
Right, they've got warehouses full of product, and one of their biggest customers is closing the door.
So what do? You find a new customer. Africa is the new customer. It's become this alternative demand source.
That makes perfect sense for China, but how are African countries paying for $225 billion of stuff if they're not getting loans anymore? They're already short on cash.
That's the billion-dollar question, isn't it? It creates a huge trade imbalance. But there's a clever financial move they're using to manage it. You'll have to look at what Kenya just did.
The currency swap. Yeah, this is a bit technical in the report.
Yeah, so basically, Kenya owed a lot of money in U.S. dollars. And with the Fed raising rates here, the interest payments on that dollar debt were getting super expensive.
It was crushing their budget.
Totally. So they did a deal. They essentially swapped a big chunk of that debt from U.S. dollars into Chinese yuan.
Why would they do that?
Because interest rates in China are way lower right now. So by switching the currency of their debt, Kenya immediately lowers its monthly payments.
It's like refinancing your mortgage for a lower rate, but you have to switch your entire bank and currency to do it.
That's a perfect analogy. It gives them breathing room. But there's a catch.
There's always a catch.
The catch is that now you're locked into the Chinese financial system. You have to earn yuan or trade more with China to pay back that yuan-denominated debt. It solves today's problem, but ties you much closer to Beijing tomorrow.
It's just fascinating. So in the Gulf, they're the careful investor. In Africa, they're the aggressive salesman.
It's pure pragmatism. They look at a region and ask, what's the smartest, most profitable move for us right now? And the answer is different everywhere.
Which brings us to our third topic, and 4. I gotta say, this is the one that really feels like a game changer. When I think made in China, I still think of, cheap plastic stuff, maybe some electronics, not high-end science.
I think we all do, but that reality is changing so fast. The data on biotech it's just incredible. A few years back, China ran maybe 5% of global clinical trials for new drugs.
Okay, 5%.
Today, that number is about 1/3, 33%.
1 out of every 3 drug trials in the world is happening in China.
That's right. And the demand is so high, it's causing these weird shortages. You saw the part in the analysis about the lab monkeys.
I did. I honestly thought it was a typo.
Nope. The demand for preclinical drug testing has grown so fast that they've literally had a shortage of lab monkeys. The price for one just skyrocketed.
That sounds like a joke, but it's a real economic indicator.
It's the ultimate indicator. It's pure supply and demand. It shows you this is real activity, not just some government 5-year plan.
So why China? Why are all these big pharma companies rushing to do their research there instead of, say, Boston or Europe?
It boils down to 3 things: speed, cost, and talent. It's way faster to recruit patients for a trial because of their huge population. It's cheaper to run the labs, and they graduate a massive number of scientists every year.
So if I'm a drug company, I can get my new product tested faster and cheaper, which means I get it to market sooner.
And that's everything. The patent clock is always ticking. Every day you save is another day of sales. But here's the real shift. They're not just testing other people's drugs anymore. They are inventing their own.
So we're going to start seeing Chinese drug brands at the pharmacy.
Eventually, yes. But for now, they're using a licensing model. Think of it like this. Chinese scientists are the architects. They invent the blueprint for a new cancer drug.
Okay.
But they don't have the global sales team to sell it, so they license that blueprint to a Western giant like an AbbVie or a Merck, who then builds it and sells it worldwide.
So China's doing the R&D, and big pharma in the West is doing the marketing.
Exactly. And we're talking about billion-dollar deals for these licenses. It is a complete reversal of the old model.
But with the politics right now, I mean, we hear about the Biosecure Act in the U.S., this anxiety about supply chains. How does this fit in?
That is the big risk factor. You have this massive tension. The business logic says, go to China. It's faster and cheaper. But the national security logic in Washington is screaming, stop. It's dangerous to rely on a rival for our medicine.
A real tug of war.
It is. But for now, the money is winning. The efficiency is just too great for these companies to ignore, despite all the political noise.
Okay, let's try to tie this all together. We've got Gulf money, African markets, and biotech labs. They seem so different. What's the common thread? What's the big picture here?
One phrase, capital efficiency.
Break that down for us.
5 years ago, the strategy was just about size. Spend everywhere, build everything, be visible. It was, a shotgun approach. Now they're acting like a really sharp investor.
They're cutting their losses.
They're cutting their losses. The
Right.
risky African loans, gone. They're doubling down on the winners, the Gulf nations with tons of cash. And they're plowing money into high-growth, high-margin sectors like biotech.
It sounds like they're preparing for a tougher world.
I think they are. They see the U.S. market becoming more hostile. They know the dollar can be used as a weapon. So they're building a more resilient economy, securing energy, securing new customers, and, crucially, securing their own intellectual property.
So less about grand gestures and more about just smart business.
It's a strategy with all the sentimentality stripped out. It's about making every single dollar or yuan work as hard as possible. They can't afford waste anymore.
Which leaves us with a pretty important question. We keep hearing that China's economy is slowing down, but if they're successfully moving their money from bad debt into hard assets and high tech, maybe they're just getting smarter, not weaker.
And if you convince the oil capitals of the world to start using your currency, you're not just building a stronger economy, you're building the foundation of a very different global financial system.
A world where safe money isn't just a term for New York or London, but maybe includes Riyadh and Shanghai. That's a huge shift, and it's something to think about as you watch the markets.
Absolutely.
That's all the time we have for today's deep dive. Thanks for listening.
Thank you.
Don't forget to subscribe and hit that like button. We'll see you next time.